Hi dear buddies, Punaravas Jayakumar here. So guys, I'm coming to you with a very interesting case law, which I'm thankful to my student Narendra to send it to me today. And he said if you could make a video regarding this. So here goes, my dear friends. It's a very interesting order by NFRA. So please watch the video completely. It's a very interesting order. You will learn a lot of things. So kindly do watch it and give your comments also in the comment section to discuss what can be done and what is the future for chartered accountants and all those things. Anyway, so guys, as you know, there is something called as National Financial Reporting Authority, NFRA. They have passed an order on 3rd January, a couple of days ago. This is against chartered accountant Pawan Jain. This is under section 132(4) of the Companies Act. Now, what is 132(4) of Companies Act? This obviously gives the power to the National Financial Reporting Authority to investigate into the what do you say? They can either do it suo moto, that is voluntarily, or a reference can be made to it by the central government. Whatever it is, they can check for professional misconduct of any chartered accountant, any statutory auditor, or any person, any chartered accountant, any professional who has the authority to certify or who has the right to certify any document of a company. So this basically was again, so suo moto, they found out about this, the NFRA. This was regarding a firm called MS Kumar Jain and Associates with its partner CA Pawan Jain. This was predominantly for a company where he had given a certificate for a company called Quest Corp, which is a listed company, for claiming deduction under 80JJAA. So 80JJAA was a section introduced by Arun Jaitley in 2016 during the demonetization time. This is for companies to, help them and encourage them to appoint more and more employees. And for every additional employee that they, employ, you can take a deduction, extra deduction of around 30% was what this section was all about. But to ensure that these are the additional number of employees, this is the exact amount that the company has spent in procuring these employees, obviously you need to take a certificate from a chartered accountant, a report from a chartered accountant in a particular form. Now that was entrusted to Mr. Pawan Jain. He was the person who had to certify the additional employees, etc. Before we go into the order, let me just quickly brush through as to what is that, 80JJAA. I will use my CA final notes for that to quickly tell you. So eligible SSE in this, any SSE. So in this example, the listed company is doing it. Any SSE carrying on business whose books are subject to tax audit under 44AB. So this Quest Corp will definitely come under that. 80JJAA provides 30% of additional employee cost as deduction per year for 3 consecutive assessment years. So guys, compared to last year, if this year I have 20 employees, 30 employees, 40 employees, on their that cost that I am bearing from the additional employee cost that I am bearing, on that 30% I am going to get. So if I am spending, let's say, 1 crore extra for around 70 employees, I will get 30 lakhs more deduction, which means a 30% savings on 30 lakhs is what I'm going to get. This was a benefit given by Shri Arun Jaitley in the 2016 budget, if I'm not wrong. Okay, so but there are certain important conditions. Please note, the business should not be formed by splitting up or reconstruction of an existing business. So if I get more employees because the company amalgamated with one more company, then that you will not get the deduction. Similarly, any business reorganization, compromise, arrangement, etc., because of which your employees increased, you will not get any deduction. Then of course you should take the audit report of a chartered accountant. This is that report that we are talking about. It shall be issued 1 month prior to the date of furnishing the return of income. And basically additional employee cost means what? Basically, if there is no increase in the number of employees, for example, last year there were around 100 and then around 20 left and then 10 was added. So will I get deduction? No, because overall if you see, last year it was 100 and this year it is coming up to 90. That is not an additional employee. Though 10 employees were added, that is not called as additional employee cost. Second, payments, if it is made via cash, then 100% you will not get any benefit. It should be through account pay check or through bank, NEFT, IMPS, etc. The following employees are not considered as additional employees, mind you. if the total emoluments, mind you, these are all the keywords, total emoluments means all put together, the salary payable is more than 25,000 rupees, for such people you will exclude from the purview. This predominantly is to create employability to lower middle class and middle class skilled labor or semi-skilled labor, where your monthly emolument will be less than or equal to 25,000 rupees. And the entire contribution is paid by the government under any notified employee pension scheme. So any scheme, if it is floated by the government, and if the government is paying the pension scheme, they are reimbursing the pension as per the employee pension scheme, such employees will not be counted for this deduction because government is helping you give that in some cases. He does not participate in the recognized provident fund. So if he participates through provident fund, only then he will get this benefit. If he does not participate in any provident fund, recognized provident fund, which means if the company is investing in unrecognized provident fund, then this deduction, additional deduction, you will not get. And if he is employed for less than 240 days during the previous year. So guys, basically, if he's employed in January, February, March will be roughly around 90 days. That's all, right? So will he get deduction that year? Will the company get deduction that year? No. But next year, if he is obviously continuing, then he will be 240 days will happen next year anyway. So in this year, he should be 240 days. Otherwise, it will be counted in the next year. That is the thing. So basically, these are all the important conditions. Now let us see what happened in this particular case. So here, Mr. Pavan Jain had certified in form number DA. So that is the form in which you have to give a report, that 1,135.41 crores as what? The claim of deduction. This was, the 30% was 1,135.41 crore. This was the deduction. Based on this, imagine the tax saving. So 30% on this, the company is saving tax. So they are saving almost around, some 300 crores of tax because of this particular deduction. So that's why the suo moto initiated action against 132(4) of the Companies Act, which I showed you now. Right. There, the investigations have seen that the CA has failed to exercise due diligence, because what all you have to check, first of all, I have to verify, because as per NFRA, the CA has not verified reorganization of business, because if you're split up, or if you have added employees because of business reorganization, you cannot claim deduction. Second one, you should exclude all the employees where the entire contribution is paid by the government under a notified employee pension scheme. That is not, have you verified or not, they are asking. Third one, you should correctly report the number of employees properly. You should do the math properly. You should verify. And fourth one, have you verified whether they have been paid cash or whether they have gone through IMPS or check, etc. is what you need to see. And fifth one, have you checked the employees are getting less than 25,000? What if employees who are getting more than 25,000 are also included? There is the question. So guys, based on investigation, the NFRA has slapped a penalty of 50 lakh rupees on this chartered accountant CA Pavan Jain. Why? Now we are discussing the why of it. Please concentrate. So initially they speak about what NFRA. NFRA is the big daddy. They can do whatever they want. There's an authority, suo moto, they can check the implementation of the auditing and accounting standards, etc. And they will cover anybody who is covered under SQC1, that is Standard on Quality Control, which means anybody who can issue a report or certificate are bound by the duties and responsibilities of SQC1, and they are bound by any order passed by National Financial Reporting Authority. So what had happened, facts of the case, the Director General of Income Tax, Bangalore, shared some information about the irregularity in this particular company, saying that you have claimed 1,135.41 crore as deduction. So then basically these guys came to know about it in NFRA, then the suo moto initiated action to check whether it is really true or not. For 3 years they had claimed, financial year 18-19, 19-20, 20-21. As I told you, this section came in 2016. So now they figured out, they gave an SCN, show cause notice, to the chartered accountant and said, boss, these are the irregularities that we are finding, kindly reply. They have told that you are grossly negligent in your duties and you have not obtained any appropriate information necessary for you to certify that the claim should be how much? 1,135.41 CR. Now, the CA sought 7 days, days for replying, and he also told that my health, there are some health issues, and he said, I'll have to find a lawyer for all these things. But in his reply, he has agreed that maybe there are certain lapses. If you see, they have given it in bold here. He said that he might have erred, means I might have made a mistake, I'm sorry, in my professional judgment, but it was not due to negligence. He's telling I made a mistake, but it's a genuine mistake, and I have requested a lenient view. Yes, they have requested the NFRA, sir, please go, what do you say, don't go so harsh on me, be lenient is the request. So this is the first part. But what are the lapses, guys? One by one we'll analyze. So as I told you, you should give a report of the accountant in form number 10 DA. And this report should have all these things. Number of employees on the last date of the immediate preceding year, number of employees on the last day of the previous year, number of employees during the previous year, number of additional employees and the additional emoluments that they are taking, total number of emoluments. Emoluments means salary, etc. paid. All these things you have to give. And NFRA found that the claim, this is what the Mr. Pawan Jain had claimed for each of the assessment years: 113 crore, 561 crore, 428 crore and 428 crore, overall coming up to that 1131 whatever that crore. Now, first condition is it should not be formed. Business should not be formed by splitting up, reconstruction, etc., or by transfer of business, etc. So, first allegation against Mr. Pawan Jain was, they said, if you check the notes to accounts and if you check the news also, this company predominantly is into staffing requirements, hiring requirements, and it provides employees to various companies. And if you had seen, which is publicly available document, if you had seen, they said this company is actually more employees are added because the following merger: Aravon Services, Co-Achieve Services and Master Staffing Solutions, they were all merged into one. And you remember one Thomas Cook, one company was there. They were into all, what do you say, tours and travels. So even in UK itself, that got closed down, went to insolvency. So here also it got merged with one more, you would have heard one more travel agency called SOTC. SOTC is very famous. So it went into SOTC, they merged. So because of that, here in 2019 effective date, your employees increase because you were into providing these employees to all these companies anyway, and they are all linked. So when they all merge, your employees also will increase. So if you see, the CA was required to obtain evidence about this, but it was not done. The working file did not obtain any such information. They will check the working file. They said, okay, boss, if you are telling that you are verified, show me the working file. Not done. While denying the charge, CA Pawan Jain replied that it verified this transaction, and they told that that company had not claimed any deduction. But in fact, when you see the workings, they have actually claimed deduction. If you see, they have claimed 66,470 additional employees, and 80 JJA was claimed for 42,447 employees, of which 24,023 employees had not completed 240 days. I told you. So overall, that's all. 42,447 employees out of 66,470 employees you have actually claimed. They are actually employees of that merger of Aravon and MSSPL. And now you are telling you have not claimed. It is obvious that you have claimed. In this calculation, you have only done, Mr. Pawan Jain, you have claimed it there. And how can you say that you are not claiming? That is point number one. Second one, you did not obtain evidence about the splitting up of business, but simply relied on a management representation letter. Under SA 580, management gave a letter saying that no, we have not formed because of any reorganization. But if you see in reality, actually you have. They have reconstructed, there is amalgamation. Unfortunately, CA Pawan Jain has not checked that. So definitely he has failed to obtain sufficient and appropriate evidence and failed to exercise due diligence and professional skepticism. Second one, we have seen here, right, where the entire contribution is paid by the government under the notified employee pension scheme. So what happened there? There was a scheme whereby some of the employees were under the Pradhan Mantri Rozgar Protsahan Yojana, PMRPY. One Yojana is there where the pension is reimbursed by the government. So around 8.33% the company has to pay, and roughly around 1.6% or 1.9% the government will pay. They will reimburse. So they are asking Mr. Pawan Jain, there are so many employees who had opted for this scheme, you have not checked only. You have added them also for the deduction purposes. ATJJA, these people should be excluded from the total number. And if you see, that amount was roughly somewhere around 128 crores. You have added that 128 crores for additional deduction. So if you see, Pawan Jain's reply was, they said, sir, the act uses the word entire contribution is paid by the government. Sir, entire contribution was not paid by the government, sir. Only for 3 or 4 months it was paid by the government. NFRA beautifully told. Does the Bare Act say entire contribution for the entire period should be paid by the government? No. Entire contribution can be monthly also, no? Entire contribution per month can be paid by the government. Entire contribution for 6 months can be paid by the government. Where does it say entire contribution for entire period should be paid? So Mr. Pawan Jain said, sir, since entire contribution is not paid by the government, I have taken that in the calculation. They said nowhere in the Bare Act it says entire contribution for entire period. If you make entire contribution equal to entire period, that is wrong interpretation. So they asked him, where in the Bare Act have they told entire period? Not there. So there also mistake. Beautiful observation by NFRA. You see, the government reimburses the money to the claimant. Entire money will be given. Whatever the reimbursement is there, everything will be reimbursed by the government. Nowhere the act specifies entire period. Therefore, entire contribution can be for a specific period also. The government can, the government can pay entire contribution for 3 months. The moment 3 months you have paid, such employees you cannot take only. You cannot take it in the calculation. Nowhere it says entire contribution for entire period. Wonderful. Even in income tax, it will really help. This interpretation by NFRA is perfect. Right? So as per EPS, 8.33% is paid by employer and 1.16 is paid by central government. They have paid now for a few months. So they have said to construe entire contribution as entire period is far-fetched. And they've used one, I mean, it is actually like very demeaning, but that's how it is. They are trying to tell that you are trying to rationalize your negligence by this interpretation. Is what NFRA, strong words, guys, very, very strong words. So as we have seen that NFRA is a watchdog and a bloodhound, everything. There have been some, dialogues by NFRA, past chairman and also, the executives of NFRA in various forums which I have attended. One of them had told that, just listen to this. One of them had told that a chartered accountant, of course, should be a watchdog but not a bloodhound, right? We in NFRA do not expect a chartered accountant to find a needle in a haystack. In a bunch of hay, I will not expect you to find a needle. It's okay, no problem. But chartered accountants nowadays are failing to identify even the elephant in the room. I was sitting in the room when he actually said this dialogue. It was like a slap on my face. I'm not joking. Right? It was a slap on every chartered accountant's face. Imagine the dialogue. He said, chartered accountants, we do not expect chartered accountants to find a needle in a haystack. We understand. But chartered accountants these days are failing to see even an elephant in the room. Are you understanding? That is why NFRA is becoming very, very stringent and tough day by day. Anyway, so here they say professional skepticism was not at all exercised by CA Pawan Jain is what they said. Next, in additional employees. So guys, basically, for example, if there are, last year if there are 100, this year if there are 150 employees, are there 50 additional employees? Yes. But let us say in that 20 people are appointed only in January. Have they completed 240 days? No. So basically 150 I cannot take, only 130 I can take. Fair enough. These 20 employees will come next year. I can take benefit next year. They are called as spillover employees. Spillover employees. Fair enough. But what has happened now was next year. Now this year I took 100. What is the additional? 30. 30 additional. Next year I should take 20. I should take 20. Fair enough. This is assuming no changes happen. It is assuming no changes happen. In this particular example, I showed you the spillover employees of around 23,000, 24,000. 24,023 were the spillover employees. This 20 is 24,023. So next year you can claim. But guys, next year you can claim only if other things remain constant. But in this example, some people left, some people joined. So actually, if you do the math, technically speaking, only next year, if you saw, only 4,000 employees had increased because many of the old people left, new people joined. Spillover is one issue, but actually I should check as per the law the difference between what was there last year and what was there this year. What was there last year minus this year is not 24,023, it is only 4,000. 4,000 will include the spillover also, few of them. Some of them would have left also. Very, very sad to tell you that the chartered accountant calculated on 24,023 and not on 4,000. Huge blunder in my opinion. Right? This is what even the NFRA is telling. There's a reduction of 19,196 already. So you are taking spillover of 24,023. In that 19,196 already left. How can you take them? You should only take 4,827 employees, but you have taken on 24,023 employees. That adjustment itself is wrong. Right? Because you should see the only increase in the number of employees from the total number of employees as on the last day of the preceding year. So last day it was whatever 289 792 minus 270 596. 19,000 already reduced. You have taken spillover 24,000. So 24,000 minus 19,000, actual increase is only 4,827. You have not done this. You have taken the entire spillover. And this is 100% wrong. Again, you have not done any professional skepticism. And what is the guarantee that they have actually paid them through bank account? So he said, I have taken the salary dump. You have just accepted what they have given. Have you checked? Show me the employment contract working paper. Show me the working paper where you have done, even on a sample basis, check the actual entire trail of transactions. Whether it has gone via bank account or whether you have paid, they have paid cash. You have not done. You have just relied on the internal financial control, but have you actually checked? Not even in a single case, salary of an additional employee was verified from beginning till the end. Hence, professional misconduct. Then total emolument should not exceed 25,000 rupees. And you only don't know what do you mean by total emolument. Have you taken a breakup of basic, DA, commission, etc.? Have you checked the employment contract? You have just accepted a salary data. What if they are paying salary of 15,000 rupees and some other expenses they are paying 15,000 rupees per month, like reimbursement? Have you checked that? No. What do you mean by total emoluments? Means all payments. What if they are paying like reimbursement of expenses just to ensure that to claim this deduction? Because if you are getting more than 25,000, you will not get the deduction. So they have not checked. The CA said, sir, some months, even if it goes beyond 25,000, it's okay. I should see 25,000 into 12. I should see 3 lakh rupees annual limit. And he gave some couple of case laws. He said that case law is not related to ATJJA only. Show me a case law linked to ATJJA. You can't show me some random case law in some other case. That also was struck down. Both cases are irrelevant to this case. Income tax law is specific. You generally check the salary data from salary master software. You only check some controls and IFC. You did not even check the bifurcation of the emoluments. You saw one register called salary pay register. You did not even check the other income register. This is the other income for the salaried people. You did not check that only. Lack of diligence on part of the CA. So again, we charge with non-verification, etc. This certification itself is wrong. So he was liable under clause number 7 of part 1 of second schedule of the CA Act. Failure to exercise due diligence. And second, failure to obtain sufficient information which is necessary for the expression of an opinion. Clause 8 of part 1 second schedule CA Act. And by the power vested under 132(4), He has told income tax has trusted chartered accountants by giving them authority to certify certain things. You have the responsibility to do it properly. There are huge implications for revenue. You have taken a benefit of almost around 300, 400 crores. Huge impact. You have not taken. According to our Companies Act, I can impose a penalty of not less than 10 lakh, but may extend to 10 times of the audit fee. So you have earned some money from this. I am going to impose a penalty of 50 lakh rupees, my dear friends. This came on 3rd January 2024. And the order will be effective after 30 days from the issue of this order. So you need to, Mr. Pawan Jain has to pay. This was a chairperson, Ajay Bhushan Prasad Pandey, full-time member Praveen Kumar Tiwari, and Smita Jingran, full-time member. Authorized by the National Financial Reporting Authority, signed by the Secretary, passed day before yesterday. So guys, this was the very interesting case. Please do let me know your thoughts. Do you think NFRA is too harsh? Or do you think the chartered accountants deserve it? Or do you think we need a breather? Do you think something else has to be done? No, let me know your thoughts as well. I am here only to report what are the facts. Couple of points I agree, but do you think it's too harsh, or are we as a profession taking things for granted, or are we sort of suffocated by so many things? On one side, there is lack of money and people are not paying. On the other side, NFRA is breathing down our neck. So are we getting suffocated is one more thing that you need to think of, and please do write your comments. We are all here for a healthy discussion, guys. Okay. Thank you so much. Love you all. Take care. Cheers.